Howdy, everybody. Welcome to Liberty Call. Today is Monday, October 28th, 2024. Hope you're having a fantastical day out there in the interwebs. Beautiful day here in Colorado. It's probably the last day we're going to have in the 70s, so it is very nice. We're going to have some probably snow and ice on Wednesday, so woohoo! All right. Anyways, before we get started, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All righty, let's get into today's markets. Dow Jones was up 0.65%, 273 points, closed at 42,387. S&P 500 up 0.27%, 15 points, closed at 58.23. NASDAQ also up 0.27%, 49 points, closed at 18,568. The VIX was down 2.61% today. It's at 1980. Canada up 0.42%, Brazil up 1.02%, and Mexico just up 0.06%. In Europe, Germany was up 0.34%, the UK up 0.45%, France up 0.79%, the Netherlands down 0.22%, Spain up 0.77%, Italy up 0.69%, Switzerland up 0.51%, and Portugal down 0.88%. Russian exchanges once again in the red, MOEX down 3.16%, RTSI down 3.72%. And the overnight markets, the Nikkei was up 2.01%, Australia up 0.12%, New Zealand up 0.51%. In China, the Shanghai was up 0.68%, the Shenzhen Component up 0.62%, China A50 up 0.03%, DJ Shanghai up 0.79%, Hang Seng up 0.04%, and the Taiwan weighted down 0.64%. All right, good stuff. All righty, well, let's hop into the weekly economic update. Stocks were mixed last week as fresh economic data points and election-related uncertainty slowed market momentum. The S&P 500 fell 0.96%, the NASDAQ rose 0.16%, the Dow Jones was dropped 2.68%, and overseas markets slid 2.3%. The NASDAQ leads. Stocks were mixed for the first half of the week as investors geared up for a steady stream of Q3 reports. The 10-year Treasury yield continued to trend higher, which caught the attention of some traders. Markets fell Wednesday morning with news that existing home sales fell to a 14-year low in October, still slowed by higher interest rates. Sales are on track for their worst year since 1995. Also, pre-election jitters remained an undertow with traders. News that durable goods orders rose in September buoyed sentiment a bit at Friday's close. The NASDAQ, fueled by technology names, marked its seventh consecutive week of gains, but the S&P 500 broke its six-week winning streak. All right, election focus. With the election cycle in full swing, some traders appear to be preparing for an uptick in volatility in the coming weeks. In late August, nearly 90% of stock traded above their 20-day moving average. However, the momentum has slowed. On Tuesday, Standard & Poor's reported that the number of stocks above their 20-day moving average fell to nearly 50%. Traders may be moving more to more of a risk-off position ahead of November 5th. Economic data coming out this week. Tuesday, we have international trade in goods, consumer confidence, and the Case-Shiller Home Price Index. Wednesday is gross domestic product, Treasury refunding announcement, pending home sales, and the ADP employment report. Thursday, personal income and outlays, and Friday is the employment situation and the ISM manufacturing index. We've got a bunch of companies reporting earnings. Today on Monday was Waste Management. Tuesday is Google or Alphabet, Visa, AMD, McDonald's Corporation, and Pfizer Inc. Wednesday is Microsoft, Meta, Eli Lilly, AbbVie, Caterpillar, Amgen, Bookings Holdings, ADP, and Starbucks. Thursday is Apple Inc., Amazon Inc., MasterCard, Merck, and Uber Technologies. And Friday is Berkshire Hathaway, ExxonMobil, and the Chevron Corporation. All right, so that's the week as it stands so far. All righty, well, let's get into today's market recap. S&P 500 climbs ahead of busy week for data, big tech earnings. The S&P 500 rose on Monday, continuing recent gains as investors prepare for a packed week of economic data and major corporate earnings, including from top companies. Anticipation is high for quarterly reports from 5 of the Magnificent 7 tech firms, which hold substantial market influence. Alphabet, Meta, Microsoft, Apple, and Amazon are set to release earnings this week, providing insight into the tech sector's performance, particularly regarding investment in artificial intelligence. In other tech news, Taiwan semiconductor manufacturing shares dropped over 3% after suspending shipments to Chinese firm SOFCO. The decision followed reports that TSM manufactured chips was found in a Huawei processor drawing scrutiny among U.S.-China tech tensions. A series of significant economic reports is also due, with Friday's employment report as a focal point. The jobs report is expected to show job growth slowing to 111,000 in October, influenced by recent strikes and hurricane disruptions. Additional labor market indicators, including JOLTS data and initial jobless claims, will be monitored for signs of softening. Third quarter GDP on Wednesday and the core PCE price index on Thursday will provide further economic insights, particularly on inflation. The approaching presidential election on November 5th also caught investors' attention, with polling suggesting a close race between Donald Trump and Kamala Harris. I'm not sure how. Crude oil prices fell amid easing geopolitical tensions following limited retaliatory strikes by Israel on Iran. Concerns over a broader Middle East conflict disrupting oil supplies have diminished, improving market risk appetite for now. Yeah, they're just like lobbing missiles back and forth just to show, hey, we're not wimps. We don't want to show the other side that, we're being too easy on this. And now Iran saying, we're good. Yeah. So I personally think they should just blow each other up. I wouldn't mind. All right. Last up comes from our friends over at First Trust, the Monday Morning Outlook. Markets are smarter than government. This was written by Mr. Brian Westbury, who was on Fox Business this morning. All right. Milton Friedman's idea about spending highlights the difference between using one's own money versus spending other people's money, especially on others. When spending one's own money, efficiency and value matter. However, when spending someone else's money, particularly government funds, wastefulness often becomes inevitable. Those of us who work for the federal government know exactly what they're talking about. This concept is exemplified in recent developments, with tech giants like Google, Amazon, and Microsoft investing in nuclear power to fuel their AI-driven data centers. These companies require reliability, 24/7 power source, something intermittent solar and wind energy cannot provide. As a result, they've turned to nuclear energy, despite the fact that it's been largely ignored by the Green New Deal and sustainability advocates, who have instead promoted wind and solar at nuclear's expense. Well, if I could stop there. The reason why all these lefties are so big on the Green New Deal and wind and solar is they have friends in that business, and that's how they're helping their friends out get rich with government subsidies. It has nothing to do that they actually think it's going to work. Jumping back in, many governments, including those in California, Michigan, and Germany, have closed nuclear plants, prioritizing natural energy sources over man-made nuclear energy, likely due to political rather than pragmatic reasons. Well, oil's natural, comes out of the ground. I mean, I don't know why people freak out about that. Over the past 2 decades, governments worldwide have spent or incentivized nearly $18.8 trillion on green energy initiatives, with a mere 1.4% allocated to nuclear. Remember when I said they're helping out their buddies? $18.8 trillion. There's where all the grift is going, or the graft. In 2022, $3.5 trillion went into green projects, with less than 1% supporting nuclear power. Much of this investment relies on sustainable debt issuance, fueled by government-subsidized loans and lower interest rates from central banks, especially the U.S. Federal Reserve. However, as rates rise, this debt-heavy funding model may prove unsustainable. In contrast, tech companies also are choosing nuclear for its reliability, underscoring Friedman's view: when spending their own money, businesses prioritize efficiency and proven solutions over political trends. This, as the analysis concludes, is the only genuinely sustainable path forward. Good stuff. I mean, nuclear's natural. I mean, you just got to do a little working around to make it do its thing and create heat and all that good stuff. But I mean, it's still natural. It's not like we made it out of thin air. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. That's where you can go get all your financial planning needs addressed. So if you need to start planning for your retirement or start a business or just better use of your investments, give me a buzz. I'd be happy to help. All right. Well, that's everything that, like I said, that I had for today. And I hope everyone has a wonderful evening, and I'll talk to you again next time. Adios.